Good morning, students. This is David, sir. I'll be taking your commerce classes, that is commercial studies. In this lesson, we will do chapter number 19 from your textbook. Chapter number 19 is the meaning, objectives, and terminology of accounting. There are 12 learning objectives in this chapter. In this particular lesson, we shall cover the first three objectives, that is, namely, A. Definition of accounting, B. Definition of bookkeeping, and C. The difference between the above two. Now, before we move forward, I would like to explain what is a transaction. In our day-to-day existence in this society where we live in, we exchange goods or services for money every time we transact. Therefore, transaction is an instance for buying or selling. For example, if a baker sells his bread to the retail shops in town, he exchanges for money. At the same time, the baker buys his wheat for his flour from a farmer in exchange of money. At one scenario, he is a buyer, in another, he is a seller. Whatever might be the situation, an exchange has happened in both the situations in terms of money. This particular exchange, we call it a transaction. If you observe carefully, you will notice that we do countless number of transactions in our daily lives. We go to a grocery store, we are transacting. We go to a shopping mall, we are transacting. We go to a movie theater, we are transacting. Whether it is goods or services, we are transacting against money each and every time. Now, these transactions, for a human mind to remember and recollect, is it not possible? So what do? We write and record the transactions in a systematic manner, mentioning dates, amount, proper narration, so that we can draw references from these books at any point of time. This method, we call it as accounting. You will see there are various definitions mentioned by Smith and Ashburn, R.N. Anthony, AAA. But I suggest that you go with American Institute of Certified Public Accounts, which is there in your textbook, as it explains this perfectly. So therefore, accounting is an art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. Now, there are 6 salient features of accounting. Number 1 is accounting is both an art and a science. It is an art because it records the transactions for a particular requirement. And what would be that particular requirement? It is drawing up a ledger, a journal, a trial balance, and so on and so forth. And it is a science because it is based on principles and based on assumptions and concepts. Number 2, financial transactions, as it records only those transactions and events that are financial in nature and can be measured in terms of money only. So you've got to understand this, that in accountancy we record only those transactions which are of financial nature. Number 3 is recording. As in the earlier number 2, you found out that it only records financial transactions in a systematic manner. So, such as cash book, petty cash book, purchase book and sales book. Now, if it's a petty cash book, it will record all the petty expenses, the minor expenses which happens in a particular office on a day-to-day basis, like payment for tea or buying of paper and small things. A purchase book will record all the purchases the company has purchased in that particular month or in a particular day. A sales book will depend on recording the transactions of all the goods and services which has been sold by the company. Now, the number of books totally depends on the nature and size of business. The larger the company, the amount of books are more. The smaller the company, the size of books are less. But ultimately, every company, whether big or small, need to maintain these financial transactions in a recorded manner and in a systematic manner. Number 4 is classifying. Means grouping these entries or these transactions of similar nature. This is done in form of ledger. For example, all the transaction involving receipts and payments of cash come under cash account. Similarly, all the purchases will come under purchase account. As I told you in the recording section, all the small purchases will come under petty cash. So we will group the transactions under such headings where it falls in. Once we have grouped the accounts and the entries, we will summarize the same. That is, presenting a detailed classified data in a significant manner, which helps the users to draw correct reference from it, such as preparing a trading account, a profit and loss account, and a balance sheet. The next part is very important, that is analysis and interpretation. Once the accounts are prepared, it determines the performance of the company, the financial position of the company, the growth of the company. From the figures of the accounts, we will derive and conclude whether the company is growing or whether the company is at a loss, whether the financial position of the company is strong or it is weak. How is the company performing, and how will it perform in the future years? So all these derivations we will derive from such accounts. Now, the meaning of bookkeeping. There are various definitions again in your textbook, but we will go with the following as this explains it very crisply and clearly. Bookkeeping is the process of analyzing, classifying, and recording transactions for the purpose of providing a means by which an enterprise may be conducted in an orderly fashion and establishing a basis for recording and reporting the financial affairs of an enterprise and the results of its operations. So this is a gist of the entire accounting process. So what is bookkeeping in simple terms? Bookkeeping involves recording of just transactions, only transactions, remember this, only transactions in a systematic manner in various books. The following books are journals, ledgers, totaling of accounts, and balancing of accounts. Now, since the job is of clerical in nature, a bookkeeper's job need not be very highly skilled, where he only records the transactions. So if a purchase is made, he records today a certain amount of purchase is made, he'll put a date, he will write that purchase down and he'll give a narration. We will come to this narration. Now, when the bookkeeper's job ends after posting the entry, the accounting job begins. Now, in an accounting job, which I will tell you later, that you need a skilled person to do accounting. But as for a bookkeeper, his job is very clerical in nature and very simple. Now, before we move forward, I want to explain one important thing. This is very important in your examinations and while you study, that what is a narration? A narration is a short explanation written under every transaction or entry. It starts with being. Now, for example, if the company has purchased a certain piece of furniture, he has recorded that in a very simple manner underneath the posting or the entry. We will come to an example and I will show you. Now, for example, he will write in the narration, being furniture purchased for the company. Now, this has to be very short. This is not a lengthy thing, but just to explain what the above transaction means. Now, this is an example of journal or journal entries. I'll go a quick run through on this because later on we will do this in detail. For example, this company, Orion Computer Repair Company, he has given a date of 9/1/2011 and he has written cash investment 50,000. That means in the summary, which is the narration, it is written investment in Orion Computer Repair Company. So there has been a capital which has come into the company. So when you write it, you will write being investment done in Orion Computer Repair Company. The next one is rent expense. He has paid rent of 25,000 rupees and he has paid it by cash. So therefore, it is in the summary or the narration, it is written rent is paid. You will write in brackets being rent paid. Number third transaction shows that a spare parts is bought. So, and he has paid 7,500. So in the summary or the narration, you will write in brackets being spare parts bought for the company, and so on and so forth, but we will go into detail. This is just a small example which I have given you of a journal. Now, what does accountancy consist of? As I told you earlier, where bookkeeping ends, accountancy begins. Now, accountancy, as I told you earlier also, that it is analytical in nature and this has to be summarized for various purposes. So, the following needs to be prepared for analysis: preparation of trial balance, preparation of trading account, preparation of profit and loss account, preparation of balance sheet, and making necessary rectification and adjustments in the books of entry. Now, for now, if a question comes to you that what does accountancy consist of, you will write these 5 only. When we go into detail of trial balance or trading or profit and loss account, we will explain that to you. For now, it is just this 5. Now we come to the difference between bookkeeping and accounting. Bookkeeping, as I told you earlier, it's clerical in nature. It's a very simple job where just entries needs to be posted. No major calculation is required here. But in accounting, it is analytical in nature. We have to prepare trial balances, ledgers, profit and loss, balance sheets, etc. Secondly, bookkeeping purely records transaction, nothing else. But accountancy classifies it, summarizes it, and analyzes it. The third, bookkeeping, the primary stage of maintaining accounts. In accounting, it is a detailed stage of maintaining accounts. Bookkeeping merely reflects transactions and that's all. But accounting derives and therefore shows results and conclusions. In bookkeeping, entries are kept according to the accounting principles. But in accountancy, it determines its own principles. And finally, a bookkeeping job is performed by a junior staff of a company, but accounting is performed by a senior and a skilled staff. Now, before we move on to our next digital lesson, we will end this digital lesson with the 3 golden rules of accountancy, which you should know by heart. That debit is the giver, credit the receiver. The debit, what comes in, credit, what goes out. And debit is of all expenses and losses, and credit is of all incomes and gains. These 3 rules will eventually help you in every accountancy perspective that we learn in future.